All right, so we're 5 minutes past the hour, so we are going to start this webinar. So welcome everyone and thank you for joining today's webinar. Today we'll be exploring a topic that is attracting growing attention across policymakers, financial institutions, and the private sector alike. The cost of cross-border payments for small and medium-sized enterprise. Before introducing our panel, a few quick logistic points. So this is a 45-minute session and we leave time for Q&A towards the end. So if you have any question, please feel free to drop them in the chat. I'm going to try to monitor the chat during the session out as well. I'm delighted to be joined today by an outstanding panel. So we have Jedidah Ndebele, Executive Secretary and CEO at the COMESA Clearing House, Mohammed Imaduddin, Director of Digital Innovation and Settlements at the State Bank of Pakistan, Amira Karim, Global Head of Public Policy at Amazon, and Monica Jasuja, Chief Expansion and Innovation Officer at EPA. We dive into the discussion. I'd like to ask each of you to, first of all, turn on your camera if it's not done yet, and also to briefly introduce yourself and perhaps share one quick reflection on a scale of 1 to 3, where 1 is top priority and 3 is a lower priority. How important is reducing the cost of cross-border payments for MSMEs on your already, I know, very busy to-do list? So who wants to go first? I have Jedidah on my screen, so please, Jedidah, if you can unmute yourself and introduce yourself, that would be nice.
Thank you, Julie. Thank you for giving me the floor and inviting me to this webinar. My name is Jedidah Ndebele. I lead the team at the COMESA Clearing House as the CEO. And that's the regional payment and settlement institution of COMESA. And we serve 21 member states supported by their central banks. Now at COMESA Clearing House, quickly, our mandate is to facilitate a settlement for goods and services amongst member states through cross-border payment schemes, that support financial stability, regional integration, with the aim of having inclusive trade. Now, we are currently piloting the digital retail payment platform, and this is a regional instant payment scheme, which is designed specifically to make low-value cross-border payments more affordable and accessible for the SMEs, and in fact, even the micro enterprises and individuals, especially women and the underbanked. So this topic is right by our doorstep, and that's why on a scale of 1 to 3, I would say, because inclusion is not possible unless you're looking at transactions. When it comes to payments, I would put it at a scale of 1. It's of high priority to us at the clearing house, because we found that when SMEs, even though they can trade when sending payments, the real barrier is on the economic aspects and they feel excluded. And so I would go for 1. And thanks again for having me on this platform. Thank you.
Thank you. Amira, you're next on my screen.
Yeah, so thank you so much for inviting me to this wonderful panel. My name is Amira Karim, and I lead on global public policy for payments and financial services at Amazon. And at Amazon, we work with thousands of SMEs, including from Africa. And one of the key barriers to growth for SMEs, based on feedback that we've received from the sellers that use our marketplace, is cross-border payments. So I would rate it a #1 priority. The feedback that we received from our sellers is that for SMEs globally, and not just in emerging countries, cross-border payments really determines liquidity, confidence, and the willingness to trade. And last year, we embarked on a wide study to develop an evidence base on this, and I can talk more about it during this webinar. We worked with a research organization to answer a really practical question, which is why do cross-border payments remain so expensive and so slow for SMEs, despite years of reforms and investment around the world? The study actually focused on SMEs importers and exporters in emerging countries like South Africa and several other African countries, and looks at payment costs, settlement times, and FX constraints, and real workarounds that SMEs are actually forced to use because the systems are so limiting and so expensive. I won't talk too much about it at this introduction just yet, but I just wanted to flag that our study found that there were disproportionate costs and disproportionate restrictions that SMEs in Africa faced, and I'm happy to share more details across Latin America, Southeast Asia, and other emerging regions. Thank you for having me.
Thank you so much for introducing yourself. Monica, do you want to go next?
Sure. Thank you. I'm Monica Jasuja, Chief Expansion and Innovation Officer of Emerging Payments Association Asia. And in terms of this topic, I don't think there's anything much that I can add, because Julie is my partner in crime. We're actually working on a working group specifically addressing this particular pain point that we believe was something that was brought up to us by many members. And Amira is on the advisory board of the Emerging Payments Association Asia. And this is a topic that has assumed front and center stage, simply not because cross-border payments are becoming more pervasive, but the impact of cross-border payments, specifically for financially excluded segments, is not being seen as a major impact as it should be. Now, many of us here who are attending this meeting are also sitting on some of the task forces associated with G20 goals to reduce the cost of cross-border payments. But we all know that seems to be more of an elusive goal, and technology has been improving by leaps and bounds, yet we are not seeing the real impact on the ground. So when Julie and I were working on this working group, and actually in many of our meetings, just getting consensus on some of the corridors or getting a consensus on some of these costs, etc., has been so time consuming. So can you imagine how do we actually solve this problem? And if we as experts in the room and people who really do have an understanding and have some abilities to bring down costs, or at least be able to deliberate around them, are still having trouble, then it means that the scale of the problem is at, I would say, not even 1 to 3, it's actually 0. And the impact, and we've been doing working groups and meetings, but I will say this as an SME myself, trying to receive payments, it is still one of the most difficult experiences in a country that needs digital payments all across the world. So one can imagine the impact that this has on actual SMEs who are not as educated and not as digitally savvy. So thank you, Julie, for helping us all deliberate on this very important topic today.
Thank you so much for your introduction. And last but not least, Mohammed, would you please introduce yourself?
Thank you very much, Julie, for giving us the opportunity to give our view. As introduced, I'm Mohammed Imaduddin, and I'm the Director for Digital Innovation, and also the person who was responsible and is responsible for the instant payment system, which is called RAST. So we are working. I think we have already demonstrated. All of us are in agreement that what's the importance of lowering the cost of cross-border payments actually, and how to use new technologies and how to be innovative in reducing the cost, especially for lower segments, the cost is more, and the smaller payments is not very cost effective. So we are also trying to experiment and see how to reduce the movement of cross-border payments and remittance, lowering the cost of that. So there are a lot of initiatives that has been underway, which we are planning, especially leveraging the instant payment system, connecting it with the cross-border other IPSs, seeing how we can use the wholesale payment systems and leveraging that by creating different type of product structures actually and moving it through wholesale payment system also, and how to make it like very small payments and very small remittances, very cost effective, either from the IPS to IPS or wholesale or a retail on the other side. So there are a lot of exciting things which are happening, and a lot of experimentation and exploration is happening. And really excited to hear with from all of us. And it is definitely one of the top thing on the agenda. And I will not say that it is out of 1 to 5, it is number one on the agenda, because there are a lot of things also which we are doing, and perhaps making the domestic payments very efficient and cost effective for SMEs also is perhaps number one on the agenda, because it is still something we have to cover a lot of space and territory on domestic payment, making domestic payments very cost effective and affordable, and enhancing that outreach is perhaps one, but definitely cross-border is not far behind one actually. But yeah.
Thank you so much all for your introduction. I guess the fact that everybody voted for one, and it was also mentioned during the introduction of some of the panelists, right? That actually, for me, it shows that the importance of MSMEs in economic development is no longer really up for debate. And across region, they're widely recognized as the backbone of the economy, driving substantial economic growth. Perhaps to share a bit some numbers, in Asian, there are around 70 million MSME, accounting for between 97.2% and 99.9% of total establishment across Asian member states, and contributing 44.8% of GDP, according to the data published by the Asian Secretariat. And if we look at Africa, which is the continent where obviously, the RPP is going to be deployed, and Amira mentioned also some study done by Amazon in Africa. SME represent over 90% of businesses and contribute more than 50% of GDP, as reported by the Pan-African Chamber of Commerce and Industry. I think we already touched base a bit on this as well during the introduction. Lower value flows, including person to person, consumer to business, business to consumer, and low value business to business payment, accounted for around 10% of the roughly 179 trillion USD in global cross-border payments in 2024, according to the McKinsey Global Payments Map. However, when we look at the revenue, they account for approximately 30 to 35% of the total revenue. So here, I think it was Monica and also Mohamed mentioning this, and Amira, right? It just shows that actually there is a discrepancy between the cost of cross-border payment, and is disproportionately high for SMEs, limiting their ability to trade internationally, sometimes even with neighboring countries. And to be fair, when we look at the volume are expected to grow, driven by greater mobility of people and capital, and by the fact that SME increasingly trade beyond their domestic market. So Amira, actually, you mentioned that Amazon did a study. And in fact, if you look at what's Amazon business is fundamentally about enabling SMEs to sell goods and services globally. So perhaps could you share a bit more about the study and bring to light some of the key payment challenges SMEs face when making or receiving cross-border payments?
For sure. And just to set some background, the report that we did last year surveyed over 20,000 SMEs, and it shows that cross-border payment frictions, including high fees, slow settlement rates, foreign exchange controls, and fragmented compliance requirements, actually function as a significant non-tariff barrier to trade, especially for SMEs and micro SMEs that were engaging in exporting and importing either intermediate goods or low value items that were part of the product that they eventually shipped to other countries. So this disproportionately constrains SME participation in cross-border e-commerce. In fact, based on our cross-country econometric analysis, the report actually finds that improving payments enablement has trade effects comparable to tariff liberalization, something that we're all familiar with in this room, that a 10% improvement in payments frameworks across borders can be associated with a 3 to 5% increase in trade in South Africa and several other African countries. Now, there are three core challenges that the study identified, and obviously across the regions, across Africa, Southeast Asia, South Asia, and Latin America, the research highlights three common frictions, but also with important regional differences in severity. So the first is that cost is regressive everywhere, but steepest in Africa. The report actually shows that SME importers pay 5% or more per cross-border transaction in Africa, often with additional fixed administrative fees. In Southeast Asia or parts of Latin America, those costs are increasingly compressed or lowered where regional payment linkages exist that allow SMEs to connect interoperably across payment systems, and this includes using instant payment linkages. In contrast, African SMEs face higher average costs, particularly for low-value regional trade, making even neighboring country transactions uneconomic. So as you talked about those corridors, Julie. The second theme really is that speed constrains working capital across emerging countries. Our analysis found that long settlement times are a top complaint amongst SMEs globally, which I'm sure is not a surprise to many of you. In South and Southeast Asia, faster domestic rail connectivity have begun to ease this constraint because liquidity has an effect on the ability of SMEs to leverage their cash flow for growth. In Africa, however, across the board, delayed settlement often forces SMEs to pre-finance inventory longer or rely on expensive short-term credit, amplifying cash flow stress. And this is being improved upon across the region, and many African countries are making significant improvements, but it is definitely more severe in the region compared to Latin America and Southeast Asia. The last theme that I wanted to highlight is that opacity is universal. So the lack of transparency is universal, but more damaging where margins are thinner. So SMEs everywhere, as you all know, are struggling with hidden fees and FX uncertainty. And this is particularly acute for those who are trading and importing on a regular basis. However, in the African continent, compared to the rest of the other regions, SMEs often operate with thinner buffers and limited access to credit, unpredictability becomes a more decisive barrier to repeat cross-border trade. And I think, Jedidah, this is where the work that COMESA is doing can have so much impact, and is already making so much headway for many SMEs in the region. So just wanted to share those three key themes and highlight that there are commonalities, but that severity is often divergent across regions.
Thank you for this. And you mentioned the work done by COMESA and the DRPP, right? In fact, Jedidah, I'd like to go back to you next. Because before deciding to launch the RPP, actually, significant groundwork went into studying MSME needs in cross-border payment. What were the key challenges and requirements identified through the work? Do you recognize some of the challenges that Amira just mentioned? unmute, Jedidah.
For that, sorry, yes, Amira did touch on quite some of these issues, which we identified before we did launch the DRPP. And just to give a bit of context, COMESA already has an existing payment system, but there was a realization that there's a certain constituent that is excluded out of that payment system. But before then going on to launch an inclusive payment system, a lot of work went to it. Time was spent by COMESA engaging various stakeholders, banks, fintechs, and a lot of it on their MSMEs to understand what was really preventing them from the small businesses, transactions. And when you look at all these stakeholders, there were key challenges that were very common amongst them. Number one was that payments were simply quite expensive for the SMEs. This included minimum fees, like when you do a transaction, there's a minimum fee that you have to pay regardless of the value of your transaction. And we know that our SMEs have low value transactions. Secondly, there were hidden FX costs or spreads. And then there were a lot of charges that related to the actual payment, often making the low value transaction very uneconomic. So the cost of sending a transaction or receiving it sometimes would wipe away the margins for these SMEs. Now, so one of the requirements we then concluded was that affordability was key to the SMEs. Now, payments were also quite unpredictable and slow. I mean, you made a payment, you did not know how long that payment would take to reach you. And when that payment reached you, you didn't know how much it would be, because at that point, there were costs that you were not aware of that were going to be made. And on that, our SMEs are very sensitive to time and pricing. So if the payment is not received on time, it means that the cash flow is affected, and supply or resupplying and restocking becomes a problem. So we then concluded that what they needed was fast, transparent, and predictable payments. Now, another one that I can highlight, which came out commonly amongst the stakeholders that was done, was access being limited by complexity of the systems that were there in place and compliance, I would say. And this is because they still find right now formal channels are very difficult to access. And even if they are easy to access, they are very slow to onboard because of KYC requirements and items like that. And even if this is done, difficult to use. There was mentioned earlier about complexity of using systems or financial literacy, and this is one of the issues. So our conclusion was the requirement for SMEs was that they therefore needed a payment system or rails that were simple to access, which had clear rules and that could work through the already familiar domestic payment system platforms. So what SMEs we believe were asking for was something that was practical, affordable, predictable in terms of settlement times and in terms of cost, and simply being able to access. And that's how DRPP has been built, directly around these requirements that were identified. So very similar to what Amira has pointed out, and this is exactly what we have resolved today with the DRPP. Thank you, Julie.
Thank you. Thank you. And can I also bring Mohammed to this discussion because merchant payments was one of the core use case for Rust. So when you launch it, did you recognize the same gaps that have been mentioned by Amira and Jedidah?
Yeah, definitely. The gap, especially the transparency element, as Jedidah has, and the efficiency and the affordability are the key driving factors, definitely in domestic payments and even in the cross-border payments. So these are the core elements and which was used in the design principles, especially for the smaller payments. The unit cost is much higher, the predictability, the literacy level, and the transparency in terms of how much it will cost and when it would reach is a common factor perhaps across the board. Let it be in Africa or let it be in Pakistan. It's a common element actually which we face, right? So what we have realized that what is required is while we the accessibility of digital payments is being affordable and transparent and reliable. Instant payment is being given to the small enterprise and micro enterprise, even the meso enterprises or very small enterprises. They give the confidence and the education to these enterprises to start using the digital payment means actually. They start using those rails which we build and they become the part of the ecosystem. So giving for education, the education start with giving them that the confidence that it will work, the money will get transfers on a timely basis, and it is very reliable and it's very affordable. So giving that confidence starts from domestic payments, and then it can translate and go into the instant cross-border payments. So there are it's a multi-pronged kind of a strategy, right? So that's why we started working on integration with instant payment system, which is built on a similar standard, which is Buna Arab payments. Uh, uh, so right now what we are doing is under integration with the Buna. Buna connects with the commercial banks. The front end remains very simple for the customers. Let it be an individual, let it be a small enterprise, let it be anybody. Because it happens, it lands, and it initiates from their normal mobile apps rather than anything else, which they are used to using it. The services are seamless and embedded in the banking and the mobile apps rather than anything else. So, which they are already used to, right? So that make things the education part remains effortless. The things remain very frictionless. So right now it's under the deployment phase. The infrastructure and the design is done, and right now we are in the we have started the implementation phase. Then the pilot will happen, and then definitely different use cases would start. It start with the inward, and it would then scale into the outward, and the micropayments would also happen. So borrowing the similar kind of experience of international payment schemes has been borrowed while we are structuring all these things. And we are also trying to learn like what is more optimal, what is more effective, without changing the interface, without changing the look and feel actually on the both sides, right? Similar experience from the sender side and similar experience from the receiver sides, without changing the dynamics, without changing the interfaces, using the similar channel interfaces, because rest is the technology, and rest is something which the operators needs to take care. And the rules are definitely which we build on a common basis. So that can give you more scale and more agility. The only question which remains is how the liquidity will move and how to make the unit cost of transfers much more affordable. The efficiency and the part and the transparency part can be easily handled through the technological interventions. Well, the technology which is already available, but the making it affordable is something which a lot of intellectual and intellectual collateral would be required actually. that how to make it much more transfers costs to make it very affordable, to make very small payments really affordable, just like it has been done in terms of like these IPSs, not the instant payment schemes, but the international payments schemes actually. So it is work in progress. Basically, I can't say that we have something which is up and running and working right now. Perhaps next year, if we have a similar kind of a session, I can definitely give you and show you the results and the numbers, that how it's working, what's the unit cost, how efficient it is. So we perhaps same time next year can show you the results and the numbers, that how we would have been able to demonstrate something actually in terms of cross-border. In domestic, yes, we have been able to started to move the needle, and the digitization and the usage of digital payment service acceptance for the small enterprise and very small enterprise. The uptake is really good, and it is really robust, and we are on the right path right now. Perhaps.
Thank you.
Yeah.
Thank you for sharing this. And I think for me, there are sort of like two key takeaways on this, which is the importance across of transparency. And transparency, the lack of transparency convert to actually a higher cost. But the second point is also that actually across the three of you mentioned this notion of affordability. And I think, Mohammed, you mentioned this notion of like unit of cost as well. And to be fair, like processing cross-border payment is not something cheap overall, right? And I think Amira mentioned, for example, the cost of FX. Of course, there is spread and business model and so on, but in reality, like the cost of the currency conversion in some currency is quite high, especially for illiquid currency. And I think, Amira, you mentioned this as well, right? That there've been improvement in the cost of cross-border payment, and I think it's definitely been also shown by the various reports done by the G20 against the KPIs, but the reality is, like you mentioned it at the beginning, Amira, that the cost of cross-border payment remain quite high, especially in some of the developing basically country. So I'd like to go to Monica now. I think at the beginning of this session, you mentioned Project Concord and what EPA is working on. Could you share perhaps a bit more about this initiative and why, despite the progress done, cross-border payments remain expensive, particularly for SMEs?
Thank you so much, Julie. So as far as Project Concord is concerned, we recognize that while we were making progress, the progress is not happening evenly. And I think Amira has previously mentioned opacity, we've mentioned customer experience, we've mentioned technology efforts, we've also mentioned education. And wherever we found was that service providers have been solving problems and they are able to do it very successfully, but one at a time. When it comes to being able to solve for the financially excluded, specifically those segments who need this the most, which is the reduction in cost the most, there were findings that I'm sure exist all across the board, but we did not have a common place whereby the service providers are also able to, in a forum or in a dialogue, be able to share how is it that they have done this. Even when we started off, one of our first earliest meetings was even in terms of being able to identify the various costs. And I know, Julie, earlier, I think Imaduddin was also speaking about how this happens. The fact of the matter is that in the summary which you just mentioned, because there is no transparency, the costs remain something which is oblivious to the paying party. And because of which, how each service provider does this is different. So what we are trying to do in Project Concord is to actually bring together the best practices, deliberate on what are some of the quick low-hanging fruits, which is very high impact, but low in terms of effort, that if we are able to identify and we are able to do this for the good of the entire category and the segment in which we are working, we would be able to share these best practices, not with an idea of commercial interests, but from the idea of being able to share for the industry what is it that somebody else may have done that has significantly lowered costs, and let that not be discussed in terms of cost to the end consumer or end merchant, but let it be discussed in terms of how these margins can be improved, which means lower costs for or lower fees to the end person. And I think that has been the major focus for us. But it also means that we've had to now, because of the various technology innovations that we have seen, we've had to significantly de-scope the work, and I say this in a meaningfully positive way, to what can be solved first, which is a few corridors, a few payment methods, but with the intention that when the learning applies for that particular use case, it's easy to then tick off and then go to the next. I think in trying to talk about cross-border payments as a spectrum, as we have all seen, even in this very short time, there are so many dynamic parameters that apply. And we are, as a team, thank you for co-chairing the working group with us, Julie. We are finding that the more we go deeper, the easier it is for us to solve that problem, at least for the sliver that we are picking up. And I hope that we will release this toolkit very soon for the industry.
Thank you. And actually, I'd like to turn to the operator because I was, looking at Jedidah and Mohammed, right? As Monica explained, we are trying to find the low-hanging fruit in terms of cost improvement and so on. Do you feel there is any? And does this exist? And where, in your opinion, are the main cost driver or operational pitfall for you when processing cross-border payments?
Thank you, Julie. And Monica, thank you. I mean, what you said at the end about how you approach it, by taking a certain corridor first, achieve success there before you can then scale and then scale successfully, as opposed to scaling and you're scaling all those mistakes or errors everywhere else. That's very, very key, very powerful. But yes, low-hanging fruit indeed. It's items that we are really identifying with now, because this is why it goes to the very heart of why our users or SMEs remain excluded, even when we have amazing digital rails. And we always say now within the COMESA banking systems that the cost of cross-border is never about the technology. It's way more than that. And if we can try to identify, or from our experience, where these costs will come from, it's never about the infrastructure itself. Number one, from experience, it comes from the fixed cost dominance. I mean, we all know that for every cross-border payment, whether it's $50, whether it's $100,000, it will trigger almost the same kind of chain, whether it's on messaging, FX handling, reconciliation of the payment, the settlement process. All these apply to that payment. And in the end, these are largely fixed costs, meaning that, as Julie said in the introduction, the cost of processing the transaction does not scale down. And what then happens is the value of the result, the low-cost transactions then carry a making them very costly. Now, so that is one. That's the fixed cost, which makes cross-border payments very costly. Number two is the minimum charge scenario, or the fee floors, as we call them. And this is where we say, because institutions would like to recover these fixed costs that I just mentioned, they will then have a minimum processing fee for each transaction, or a minimum foreign exchange cost or spread. Now, for SMEs, this already creates an instant problem, because even though we might say, or announce in the headlines that the cost of transactions is coming down, the minimum charges for MSMEs or SMEs do not actually do that because the values are so low, and it can actually turn a small payment into a very costly in terms of percentage. So this is one of the reasons why SMEs continue to be priced out of this form of cross-border channels. Now, lastly, if I could just highlight from our experience or what these costs are. Now, most hub and some of these correspondent models require participants pre-fund their accounts, and this pre-funding is in hard currency. And this is for SMEs who are involved in the official or formal channels. Now, this will create a second layer of costs. Why? Because the SME is not only incurring the transaction fee, but they also have an opportunity cost that they are then having to forego when they put in their money or lock in that capital. And it then brings in an aspect where their trade is therefore affected because it has locked in some of the money. They're used to doing their restocking, as I said, and they cannot operate at scale. I know I said 3. If I could just mention another one, is that when it comes to compliance and operational layers, for cross-border payments, it's double and sometimes more because the checks are being done at the sending end and at the receiving end. And this all adds up to these costs that we're talking about. This is what some of the things that makes this cross-border transactions costly. And unfortunately, until we redesign some of these, SMEs will then continue to just be excluded from this conversation. And hence why we're here talking about how can we make them less costly and bring in these SMEs to the discussion. Thank you, Julie.
Thank you for your answer. And I'd like to pick a bit on this because you mentioned like your last sentence was until there is a redesign, we won't be able to basically address of these cost pitfalls that are being recognized. And conscious of time as well. So I'm going to move the conversation to effectively what can we do very practically to solve this and reduce the cost. And Amira, again, like Amazon has a global footprint, you've run a study. Could you perhaps share good cross-border payment experience that you've seen and that could be considered as a template to trying to replicate and perhaps the foundation for system implementers, operators, or regulators to learn from?
Yeah, happy to. So I think that, our observation is that good payment systems are often a function of regulatory alignment. And just to go back to the conversation related to cost reduction, in our perspective and from the surveys that we conducted, we've noticed that cost is the function of structural efficiency and that regulatory alignment can really be a cost reduction tool by reducing multiple intermediaries, fragmented and duplicative checks, manual exception handling. All of this really corresponds to creating the unit economics that are inefficient, as Mohammed and Jedidah have pointed out, right? So if we can promote greater regulatory alignment, I think that will really help with SMEs experiencing the benefits of cross-border trade and cross-border payments. So the 3 variables that we think, or rather the SMEs have given us insight into, is that predictability is more important or the most important tool, and that SMEs really do prefer transparent upfront pricing, even if the nominal fees are slightly higher. And of course, that is, comes with an asterisk, meaning that there's a threshold because SMEs are very, very price sensitive. In terms of local and trade corridors, there is a really important element here to be stated, which is that interlinked instant payments or just interlinked payment systems overall demonstrate how regional interoperability can dramatically reduce costs and settlement times. And as we noted, it's not a technological innovation. It is about alignment of regulatory frameworks and alignment of, essentially systems and the policy environment. The data that from our study also shows that SMEs, particularly in places like Africa, benefit most when local currency settlement and fewer intermediaries are in the mix. So again, reducing those structural inefficiencies through regulatory alignment. The last variable really has to do with embedded payments. Across regions, we've noticed that embedding payments into marketplaces, invoicing, or ERP systems really can help reduce frictions. And this is something that I know a lot of African states are working very, very hard on, and we've seen tremendous improvements. And this matters, across low value goods as well as major exporters or exporters in the medium value chain perspective. So if I can just end off with maybe 3 observations from the work that G20 is doing, as well as the feedback that our SMEs have given to us. I think, from this conversation as well, we noticed that simplifying the enforcement of financial regulations and monitoring duplications can really reduce costs, and simplification shouldn't just be seen as a step towards deregulation, but really alignment and calibration of processes that can help SMEs and experience a better cross-border payment environment. Not to go into too much detail on digitalization and technology, because that is not a problem, not the main problem as we identified here. But we do notice that some steps towards digitization, things like compliance, reporting, and leveraging new technologies to better scope out risks that need to be addressed, can help SMEs as well as governments, address risks with more precision. But digitization can only go as far as the policy environment allows for digitization to have the right impact to really address some of the inefficiencies that are structural. And then the last thing that I wanted to point out that was also called out in the G20 Cross-Border Payments Roadmap report is that interoperating domestically and with the key trading partners, as Monica highlighted, through the adoption of international standards can really help to empower and facilitate the kind of linkages that we need for SMEs to be able to trade with confidence. So just wanted to highlight the variables that our SMEs that we surveyed, kind of shared with us were the main issues that they faced, and also some recommendations for continued collaboration across this sector and across the private and public fields.
Thank you. Thank you so much for sharing this. And I guess there is definitely a lot to unpack, but I want to try to unpack a few specific points, perhaps picking on you, Jedidah, because Amira mentioned predictability. And I think this has been also a key design principle of DRPP with a specific payment flow. So perhaps if you could share a bit more on this. And she also mentioned regulation and regulatory fragmentation as well, right? And as part of COMESA DRPP, you're across several countries, and so has to manage as well, like potentially regulatory fragmentation. So how did you manage it?
Thank you, Julie. So I think the advantage of having this DRPP under COMESA is that we have 21 member states and we have the 21 central banks. And through these central banks, we have been able to we haven't harmonized, but ensuring that the support is there from a regulatory perspective, because harmonization is something that would take, if it's possible, would take a very long time to do. So it's to ensure that in each jurisdiction, there is support from a regulatory aspect, which then enables SMEs to trade with confidence or to use the systems with confidence, whether it's for payments for goods or services. And knowing very well that the oversight of the DRPP is by the central banks. And in fact, the platform design of the DRPP then ensures that the aspect of trust is maintained because of that oversight of central banks, and the fact that a lot of intermediaries have been removed or have been bypassed in the platform design, which then speaks to the fact that regulation becomes less complex, the less participants are there in the chain, the less number of institutions touching the transaction, or the less number of layers, makes sure that in a regulatory perspective, it becomes simpler. Number two, the central banks that we are working with also have to approve the scheme rules that we have. So once we have scheme rules that have been agreed upon, scheme rules that have been approved, and they are somehow speaking, it's almost like the go-to book, which gives everyone their role to play and everyone knows what their responsibilities are. Now, that is, again, another sort of very strong point for the DRPP. And lastly, also regarding the regulatory aspect and what we feel that could reduce the costs of these SMEs is the technical solutions that we offer, again, very much driven by the regulator, which is by the central banks. And I must say for the DRPP, we are very fortunate because we settled on a Mojaloop driven solution, and so kindly funded by the Gates Foundation, we have been able to design a system that is rich in data, that is interoperable with domestic instant payment systems, and has been built and is currently being implemented by CCH with the support of Infitex Africa. So, but again, as was mentioned earlier by Amira, the regulatory aspect is what will make or break the system. You can have it all good, but if you do not have the regulatory support, then the system is unlikely to actually succeed. Thank you, Julie.
Thank you for this. I'd like to unpick another point that Amira mentioned, going to you, Mohammed, because at the beginning of this webinar, you mentioned working on interlinking with other instant payment system, interlinking with Buna, which is a regional cross-border payment system for the Arab region. So could you share a bit more how it can lower down, like, perhaps the unit of cost that also mention and improve affordability?
Yeah, in order to reduce the cost, the most of the cost, there are like multiple cost components, but one of the major costs is the liquidity cost actually, and the conversion cost of the cross currencies actually. So that needs to be tested and solved, right? How to smoothen that cost and lower the cost, the liquidity cost. Definitely, there is a liquidity cost in cross-border payment. Multiple currencies are there, so the conversion from one currency to the other currencies and is also the conversion cost is also there. So how to make it more affordable, both in terms of like managing the liquidity and the conversion cost is something which is being designed and tested. Well, other than that, the building the rails and making it, integrating it and making it efficient is something which we are very sure with the design which has been developed, it will work actually without moving a lot of things, using the best design principles to make the transactional cost very low. But the part where the liquidity and the conversion, FCY conversions, lowering that is something that we have designed some principles around it. But let's see how much it would be able to lower it. But it is for sure that it will substantially lower the cost, the existing cost actually. So if it is today, if the unit cost of moving something is X, perhaps after having this solution, it would be X minus something actually. It would reduce substantially. It would our assumption is that it would definitely the cost would reduce by at least 40% to 40% of existing cost actually. So, which is a lot actually in terms of like reducing it. If we are able to reduce it to half or even 40% of existing costs, that would definitely facilitate a lot in making smaller payments, and the value of the payments are might not matter at all actually. It would be in terms of percentage rather than a fixed fee and a variable fee. So this is something it would also address that thing. And then it's a scalable model. If it is successful in Buna, it can be done in other jurisdictions also. And we are also exploring and developing those standards, like how to integrate with other jurisdictions also, and how to scale it. Buna is definitely would give us a reach, because it has a lot of member countries basically, and member central banks. It's almost like 20 plus countries with it. So it would give a scale, but at the same time, we are also looking at how to do it with the UK faster payments and other jurisdiction actually. So those standards are also being built. So those learnings we would be able to apply and scale it actually.
Thank you.
So yeah, let's see how things happen. So it is kind of and we would be happy to share those experiences, right? If with everyone, that so that everybody can get benefit out of what we learn from this integration and this project actually.
Thank you for this, and I think it's coming back to what Monica was mentioning before. What are the low-hanging fruit and the things that are actually applicable to all corridors? I'm afraid we've already, at the top of the hour. So yeah, I'd like to thank all the panelists basically for their insight and contributing to this discussion today. Thank you so much. I think there is a question in the chat around priority of the factors to address when it comes to reducing cross-border payment. Hopefully, the toolkit that will be produced by Project Concord will give some level of priority. And then, of course, we get feedback from the operator on the call on whether they agree or disagree of this level of priority. But yes, thank you to the audience. Thank you to the person who joined this webinar today. And thank you again for the fantastic panelists for all your insight.
Thank you, Julie. Thank you, everybody. Goodbye.
Thank you, everyone.
Thank you, everyone.
Bye.
Thank you.
Bye.
Bye.